So when you're trading, it's always important to use uh, kind of benchmark tickers as an indicator for your overall strategy. For instance, if let's say I own long-term position in the S&P ETF, so SPY, and I was looking to buy SPY on the dip. And so, me knowing how to read a chart, I don't necessarily want to just rely on SPY itself to tell me, hey, this is a good time to buy. Now, what I usually tell people is to mark out significant areas or price points on the chart and use those as kind of signals to where you're going to dollar cost average. However, if you're like me and you're like, I don't want to be in a situation where I'm chasing a falling knife or trying to catch a falling knife or anything like that. I like to look at other things to kind of tell me where SPY could be going. Um, and in order to find out what that is, let's just get into it. So let's talk about VIX for a few minutes here. And I'm not going to be before you guys for too long. But VIX is a ticker that lets you know what the overall market volatility is. So, and of course, this is for you guys that don't know. When VIX goes up, the markets go down, and when VIX goes down, the markets go up. So just keep that in mind. So you can use that to your advantage when deciding when to buy and when to sell potentially. Of course, if you're just dollar cost averaging in a long-term position, then you're not selling, but you're looking for price points to buy more, uh, uh, beef up your position, so to speak. So VIX can give you an idea of where the markets are going. And if you're like me, and I watch VIX every day, and I analyze VIX, from day to day, from, minute to minute, week to week, month to month, so on and so forth. I watch VIX. VIX will start to tell you when some things could possibly happen. And so you can prepare yourself for those moments. And of course, it's not foolproof or anything like that. It's not going to be 100%, accurate, but to be able to put yourself in, one of the best positions to capitalize on market movements, it's important that you know what the volatility is at any given moment, and also how that volatility relates to the ticker that you're watching. So, VIX, the overall thing with VIX is it consolidates more often than anything else. And that's, the markets in general, but VIX especially. If you pull up like the weekly chart, so this is a 3-year weekly chart on VIX, you can see that it pretty much trades flat and then it has periods where it pops or it drops down. And so you can find patterns in that price action and make a decision as to, when you're going to buy or when you're going to look to maybe go cash or, whatever you decide to do, dollar cost average, it's up to you. Um, so just think about, let's say you're coming into this situation over here and you see the VIX is, pretty flat. And matter of fact, I'm going to go to a 5-year so we can get a little more info. So 5-year chart, you're coming in, VIX is, sitting in a support zone, so a demand, yeah, support zone, so a demand zone here. And this is like a historical level where VIX rarely falls below $10. So basically, when VIX is here, everything is fine. You know what I'm saying? Maybe your dollar cost averaging along the way, capitalizing on some bullish moves in your particular stock, or you're just, kind of accumulating. But you know, at some point, VIX is going to pop up. And these little pops aren't, they're significant, but they're not, the most significant, especially, when you compare it to this one here. But keeping that in context with like the overall market cycle is important as well. So, uh, late expansion cycle type situation where the economy is starting to slow down, um, you know, things like that. You gotta you gotta keep all of those pieces to the puzzle together, right? So coming into this situation, and I forget what I think this was. Oh yeah, this was the pandemic right here. So, and believe it or not, the markets hinted at this before it came. And not necessarily VIX, because if you go back and look at SPX and SPY on the monthly chart and just go back to early 2020, you will see a reversal pattern, a bearish reversal pattern, right in that January, February timeframe. So, of course, you don't know that, hey, there's a pandemic on the horizon. You don't know that. We didn't know that until, you know, late February or early March. But at the end of February in 2020, SPY and SPX printed a reversal candle. So, us being chartists, me being a chartist, I'm thinking, okay, I have to consider the possibility that March is going to be bearish. I don't know what's going to happen, but I know to look for a catalyst or listen out in the news for a catalyst that could confirm, my hypothesis. So, what I like to do with VIX is when I see VIX getting to the point where it's looking like it's going to pop, then you can look to hedge your positions with, or hedge your long-term positions with puts. You can go cash if you want to, of course, or you can just continue to dollar cost average. You know what I'm saying? And you use historical levels to tell you, okay, I'm gonna take profits here, or or whatever you decide to do. But VIX should be a very important part of your overall strategy, whether you are an investor or a trader. Um, it's important to know what kind of signs VIX will show when it's about ready to pop and when it's about ready to drop. And the good thing about VIX is when it pops quick, it typically drops quick as well. So you don't necessarily see periods of sustained bullishness on VIX. And you don't necessarily see long periods of sustained bearishness with VIX. Like I said, it tends to just consolidate. So what will happen is, and I'll show you on some lower time frames, is VIX tends to form like a bowl. So you'll get the bottom of the bowl is just that consolidation, and then the size of that bowl is that quick drop, and then that quick pop as well. So definitely important to just think about that intuitively when you are looking at VIX. So like I said, this is a weekly chart on VIX. What we're seeing here toward the end of the chart here over the last few weeks is that VIX has started an upward trend. So we're seeing a lot of um, higher closes on these candles over the past several weeks now. So lots of resistance up here toward the top of this, or middle and top of this zone, and you can see that VIX hasn't really had much success outside of this zone. So right now, this is kind of where VIX likes to be. And lately, VIX has been trading toward the pretty much the upper half of this zone. So sentiment hasn't changed in the markets yet, with all this war talk and things like that. So it's important to pay attention to that. And I'm watching this about 27.5 level to see if VIX finally breaks down from that. And this purple trend line here indicates the latest little short-term trend that we have right here. And this is just the demand zone between these two trend lines. And as you can see, it's mostly wicks in here. But the majority of the price action your real bodies are staying above, this level right here. And then last week, this past week, we had situation where the price closed right at that 27 and a half level for the second week in a row. However, it did not push below that weekly trend still. So until I see some closes below this trend line, I'm still, a little wary about going bullish in the markets overall. So, of course, we've seen, the markets recovered just as quickly as it dropped after we first got word that Putin had sent some troops to the border of Ukraine. But still, the markets are pretty unsure about, what's happening in the near future. So paying attention to VIX can give you some uh, ideas about, what's coming, what the markets may be anticipating or expecting. And right now, it's staying toward the higher end of its range right now. So the markets are not confident right now, in my opinion, that this is something that, we don't have to worry about anymore. You know what I'm saying? So let's take a look at the daily chart and see what the daily chart is looking like. I'm gonna do a 3-month. All right, so yeah, it's kind of looking a bit like an ascending channel has developed over the past several days on VIX. And so that's the area that I'm going to be watching. And so if you were like someone that likes to trade short term, like weeklies and things like that, what you could do is buy calls or buy puts when VIX hits the lower end of the range. Because remember, when VIX goes up, markets go down, right? And then when VIX hits the upper part of this range, you could, consider buying calls. And of course, this isn't investment advice at all. I'm just, talking through something, that I'm really watching. So VIX is one of my favorite indicators outside of trend lines. And SPY is also one of my favorite indicators as well. But when it comes to trading SPY and SPX and things like that, VIX and just the markets period, VIX is one that I definitely love to watch because it's not necessarily specific to any one ticker. Um, it's a broad market indicator. So again, VIX is right pretty much at a demand zone um, on the daily chart and the weekly chart. So going into next week, I'll be watching to see if this level holds. If it does, I may be looking for a bearish position. If it folds, then I may be looking for a bullish position. And of course, if it turns out to be, a bounce here, then maybe I look to see if VIX goes toward the upper end of its range on this daily chart, which would put it back over 30, maybe toward the mid 30s, somewhere in there, and then sell at that point, or maybe sell at the halfway point. But yeah, I don't want to, bore you guys with redundancy, but hopefully this video was helpful, and I appreciate you guys for watching, and I'll catch you in the next video.